Good morning, everyone. How's it going? It is half an hour before the market opens on November 29th. Let's take a look at how we're opening. So this is the Wednesday after a major holiday. So we're really going to expect participation in the market starting to come back in. So we'll see if we can get any clues as to how much of the market is going to be back and active. But let's take a look at our futures first. And we are up non-random. Non-random. This is pretty significant in the NASDAQ. That's about 60 basis points, about 50 basis points, a little under 50 basis points on the S&P 500. And it looks like they're a little over a third of a basis point on Dow. So we're definitely up and having so far an upward directional bias in the market. So before we get too excited, let's see how much that up represents. Let's see how much volume it looks like we're going to get inside the markets, and we're going to see if there's any ceilings to the upside. So our working theory has been that there's a high probability of pullbacks. Now, we're not the only ones who think this. We're not the only ones who've been seeing this. So what is the market going to do? The market has a tendency to take as few people up on the way up as possible and as many people on the way down as possible. Or in other words, some people like to say maximum pain, right? They like to say cause maximum pain. It doesn't like to cause maximum pain. It just has a tendency to make most people wrong. Okay. So from our perspective, if we believe something is going to happen and we believe in the imminence of that happening, and then the market does the opposite, then a lot of people give up on that viewpoint. And when they give up on that viewpoint, then they flip their position. And that is actually when fewer people believe in the viewpoint, that's actually when algorithms and institutional traders start to sell and bring the market down. So let's go over that real quick. Right here, we are going sideways. And we can see from this pre-market, it looks like we're just opening, we might open near the top of this sideways trading range. So unless we get significant movement upward during the trading day, this is still going to be sideways movement. If we start trading down back into this range, then it's still sideways movement. So we really need to see directional movement upwards in order for us to say, okay, we're starting to break out of this consolidation right here. So it looks like there's a pretty good chance of that happening today, but it hasn't happened yet. We don't know that it's going to happen just yet. We will have to wait until that afternoon session in order to see if that happens. So right here, what happened is, according to that JP Morgan report that I referenced yesterday, a whole bunch of retail traders started to get in right here. They're like, wow, look at or actually over here, look at all this upward movement. I don't want to miss out. Let me go in. And they made a little bit of money here. And then there'll be the really late people who also get in during this time. Hey, we're consolidating. Let's get in right here. So you've got some retail traders here who have bought into the market. And then you have people who had the viewpoint that we're going to pull back. They start shorting this market right here. So you're accumulating shorts and you're accumulating longs. And that's why we've had directionless trading. In order to say, hey, if I pull back, all these shorts are correct. And then the people who got in long here, they don't make their money. So what an algorithm tries to do is what's called a shakeout. Either if I just pull back, right, then all these shorts are happy. All these retail traders who got in up here are unhappy, and they'll unload their positions, but the shorts still make a bunch of money. If I go up and I wait for all those shorts to flip their positions, then the longs are happy, the retail traders are happy here. But the question is, how far up do I have to go in order to freak out the shorts? And how much money have the retail traders really made if that actually happens? And so there's this fine line right here of how much do I go up before the shorts get freaked out and flip around, and then the retail traders are happy, but they really haven't made that much money yet. And then large money goes in and sells, brings in that pullback that we're looking for, and then that is how quote unquote maximum pain happens inside the markets. It's when people don't have enough conviction. So what causes people to not have enough conviction? Either they just are uncertain about their viewpoint, or maybe they're really certain about their viewpoint like I am, but they misallocated. They misallocated their risk. So remember, over the past couple of weeks, and then especially in recent days, I've been emphasizing we are in a uptrend. We're in an uptrend. We're in an uptrend. Overall, our portfolio wants to be directed in that uptrend, but I have one or two positions that are there to take advantage of a pullback. So if that market goes up, I'm not going to panic, because the shorts that lose money that I have are a very tiny percentage of my portfolio. And that allows me to withstand it. I go, okay, no problem. Overall, my portfolio is still making money. So I can withstand that shakeout. Psychologically, I'm not going, oh my gosh, I need to get out of this so I don't keep getting hurt. I'm seeing my account just get wiped out or drained. So this is the importance of the portfolio perspective rather than the trade perspective. In any given trade, I can be wrong, but my portfolio is still pointed in the right direction. So when institutions play this game, obviously if they think the market is going down and they're preparing for themselves for it to go down because they're in control of the algorithms, they're in control of the bulk of the money. Obviously, when the market goes up, their portfolios get hurt a little bit, but they don't care, right? That amount that they get hurt is a very little representation of their portfolio. So they'll make it up and then some on the way down. So that's another perspective, but they have a lot more control in the market than we do. So from our perspective, we position our portfolio correctly, and then we take a couple of trades that reflect our viewpoint. And then when we get to these shakeout periods, we're not freaking out because our portfolio is fine. And then we can still express our viewpoint, still take profits from our viewpoint when that pullback finally happens. So if today we open up here and we start trading higher, what all that means is I'm not going to change my viewpoint. It just means that I'm going to expect it to happen a little bit later than I thought originally. So we need to find out, unless there's just clear skies above, that could change my viewpoint. Or it says there's no limit to where this market could go, but we are not at all-time highs. So there is definitely, if we scroll back long enough, we will find something. So right here, this was the high that we broke above, same high right here. Now we're matching this high right here. So we haven't quite hit this high right here, but it looks like if we open today and we move above, then we will break this high right here. And that is similar to this level right here. But we also have this one right here. So I'm going to draw that in. We got that one right there. So at about 460, or maybe slightly above 460. And then we have this one right here. So what it is starting to look like is you had this huge surge upwards that drew a whole bunch of money into the markets. And then you got people starting to speculate that we're going to pull back. And then algorithms and institutions go, let's just let it go a little bit higher, or maybe a little bit higher. And all these people who are short here flip their trade around. The people who went long over here are happy, but then this is when a huge pullback can happen. Quick, fast, so that these people freak out and they close their longs, and then the algorithm gets its belly full, and then that's when we can do the Santa Claus rally. Okay, so that's what it's really looking like to me. I could be wrong. I could still be wrong. This market could be incredibly strong and keep on sticking to that Keltner channel, that Keltner channel 3, the 3 ATR Keltner channel, and just keep on riding it up. It is possible, but again, based on market dynamics, based on history, it's not sustainable. It just cannot stay at that +3 ATR forever. We were at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days so far, and that's about as long as it goes. We can go up for more days in an uptrend, but not following the +3 Keltner channel. Generally, it's a +2 Keltner channel, transition to +3 Keltner channel, maybe back to a +2 Keltner channel, and then a pullback. So we could go longer, but once we hit that +3 Keltner channel, we just do not see even this one. From this zoomed out perspective, it might look like it, but what you see is that we hit that Keltner channel, then we pull back to the +1. We hit that Keltner channel, we pull back to a +1. We hit that Keltner channel, we pull back to the -1. So even though from a zoomed out perspective, this looks like it might have been a really long run, it was pulling back to that +1 Keltner channel several times during that really long run. And that's all I'm looking for. That's all I need. All I need is that pullback to that +1 Keltner channel, and the shorts that I have in place will make money. Unless this really flattens out, then I'll probably break even. That's all I'm looking for in those trades. I'm not looking for it to pull back, although it could pull back all the way to -1, -2 ATR, but I'm not in it for that. I'm just in it for that +1 ATR. If it does this, then I'll expect a much deeper pullback, and then I maybe will change my viewpoint or edit my plan for those trades, and then go to allow it to pull back to EMA 20 or -1 or -2 ATR. But that's too far ahead in the future for now. My current plan is wait the shakeout through, and either I'm right about the shakeout and we pull back at least to the +1 ATR Keltner channel, or I'm completely wrong about everything and we throw market dynamics out the window. That would mean that there's something fundamentally different about this market than there has been in the past that somehow I'm not seeing and I'm not taking it into account. Okay, so so far, obviously, if I can't see it, I don't know about it, then I can't take it into account. But I've been looking, and I haven't found anything yet that allows me to believe that this is a fundamentally different market than we've had for decades. So I'm not going to get too excited about the fact that the markets are opening up higher from a future standpoint. What this does, though, interesting, that I haven't thought about this before, is look at our volatility. We are super low on volatility. We are at the lows or slightly below the lows that we've had for a really long time, since before COVID. Okay, so we're matching pre-COVID volatility levels. And this is probably not to see down here in the 9s and 10s, very unlikely. Okay, and so 9s or 10s are way, way, way before COVID. So actually, yesterday I said I had a favorite trade. This is my new favorite trade. VIX is my new favorite trade. Because if we pull back a little bit, we're going up. If we pull back a lot, we're going up. If we don't do anything, we're not really going much further down. So I have a very limited downside, but I have a huge potential for upside. So we love trades like that. And then if we can leverage on top of that, that is huge. And then look at what happened yesterday. I'm just noticing this. Yesterday, we had a big run up and then came all the way back down. So this market is waiting to do something. It's waiting to pick a direction. So the trading range that we've been in, it has to change. We cannot continue to trade in these tiny, tiny little bars forever. So at some point, this volatility is going to spike. It's just a matter of when. Does it happen this week, next week, 3 weeks, 4 weeks? I'd be very comfortable with saying within a month or to a month and a half, there's extremely high probability of this VIX moving back up. So just like yesterday, boom, that's just one day. So what if I got 2-3 days in a row of upward movement? I could hit this MA 200 level. Normally we don't use moving averages on VIX, but the line is there and it's convenient for me to reference it. Just we can move up to this 16, 17 level quite easily. It's a level that we visit often. We don't have to spike super high into the 20s or 30s, right? 17 happens often. So is there a trade where if it goes down, I don't get hurt very much. And if it goes up, I benefit greatly. So we would go over here to option strat and look at the VIX. We would buy a call, basic long call on the VIX. I want to buy myself some time because I don't necessarily know that it's going to happen in 1 or 2 weeks. So I'm going to go out of the way out to January. We're currently at 12.61. I want to buy myself some room. Okay. So how much does an 11 strike call cost? Costs $4.47. That means at any given point in time between now and January 17th, if we spike up to 15.5, I'm going to at the very least break even. The sooner we get to 15.5, if we don't get to 15.5 until January 17th, I'm going to break even. If we hit 15.5 before January 17th, I'm going to make money. The sooner we get there before January 17th, the more money I'm going to make. Okay? And if we go above 15.5, we go to 17, like I was looking at, or if we get that huge pullback that we were talking about and our volatility spikes into the 20s, then I'm going to make a huge amount of money on this trade. So what is the likelihood between now and January 17th that we go above or at least hit 15.5? Is that a believable move sometime in this time period? I would say yes. But then see, maybe I like this, maybe a cane that's a little too much movement. Okay, so if I want to pay less, then we can go less, but then I have less time. Okay, so January or December, just say December 20th. Okay, so if I say December 20th, and we'll keep the same $11 strike. Now I'm only paying $2.74. So now it only has to go to $13.74. We'll call it $13.75. Okay. Is this believable? This is completely believable. That happened yesterday, right? So this is a great trade for me to put on. So this is going to be my example trade for today. This is my new favorite trade, even more than that QQQ put that we did yesterday. So this is the pre-market example, 11/29/23 on the VIX. Okay. So let's just, we're 10 minutes before the market opens. Let's just get a couple quick levels on our S&P chart here. In the pre-market, we have this high, but we have a local high. What is that local high? That's from a little bit, that was from a little bit before. So we do have a little bit of a local high up here. We are also talking about the roughly 460 level. Okay. But that's a little far away. Maybe if we have a really strong market, it's possible that we could hit it today. So let's get the levels that we can see. So this is close enough to local high. I'm not going to mark it. I'm just going to mark where looks the current level. Okay, and there has been some consolidation at that current level as well. So that's a good line to mark. We have the previous high. That's pretty good line for the other levels that we've had in the pre-market. The previous close is a pretty good representation of the aftermarket yesterday. Previous low is the previous low, so there's really not any other lines for me to draw right here. So these are going to be the levels that we're going to watch. If we break through that local high, we're going to see, we don't have anything to reference. So we could get really directional in the market today if we break through this local high. If we break below this previous high, then we could get pretty directional to the downside as well. So the one thing I didn't look at was, do we have any indication that we could be getting volume back in the market? So I'm going to look at the futures. I'm going to look at it on a day basis as fast as I can, since we're getting pretty close to the open here. So this is Wednesday. We already have our bar on Wednesday because futures started trading. The start of the futures day was several hours ago. And what I see right here is, it's really hard to tell. Maybe. Yeah, so it's still a very small bar, but of course we are early in the trading day, so we don't expect a huge amount of volume. How did I? Nope, I can't get. So this, it's being covered by the symbol, so I can't gauge exactly how much, but what I can tell you is that if it's being covered by the symbol, we are at least halfway of this bar right here on Friday. So I think we can overcome the Friday level. The question is, do we match yesterday or do we get closer to that average volume? So yesterday's volume was pretty decent but it's still low. And then in the actual S&P, the volume yesterday, yeah. So we do have potential to reach the average volume today. It's just a little too early for us to say for certain. Okay, so that didn't give us too much information. All right, guys, let's get prepared for the market open. I'll see you in the afternoon session, and we'll see just how directional we get and if we get that breakout to the upside. All right, see you guys later.